According to dividenddata.com, it says the snowball effect is the idea of how reinvesting earnings can lead to an exponential portfolio growth over time, much like a snowball rolling downhill. It also says the snowball effect refers to the process where reinvested dividends are used to purchase more shares of a stock or ETF, which then generate their own dividends. Over time, this reinvestment cycle can lead to significantly larger investment returns and portfolio growth. Now across YouTube, as you can see, there's tons of dividend investors talking about the dividend snowball and basically explaining how at a certain point, the dividend snowball effect, the compound interest effect can take place, so much so to the point to where the portfolio sort of has a mind of its own. Now, even though there's tons of investors out there, especially on YouTube, that talk about the dividend snowball in theory and sort of theorize how a dividend portfolio could in fact potentially have this snowball effect take place in the future, in this video specifically, I want to break down my long-term 7-figure dividend growth portfolio, show you every single position in the portfolio as of right now, and show you in real time, share with you real dividends that I'm getting paid on a monthly and quarterly basis, and show you how my long-term dividend growth portfolio is snowballing out of control. So if you want to see a real-life dividend snowball and see all the numbers behind it, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So just for some context here, this is more or less every single stock and ETF that I currently hold across all my brokerages, all my portfolios combined. And as of right now, my portfolio is currently earning around $6,500 per month in dividends. And of course, some months are going to be larger, some months are going to be smaller, because not every single company and or fund pay dividends monthly. But on average, and for a while now at that, this portfolio is generating me north of $6,000 in dividends on a monthly basis. Now this of course did not happen overnight. I've been investing for 7 or 8 years, putting basically every single dollar from my active income sources into different dividend paying stocks and ETFs, with the longer term goal of building a portfolio that can sustain itself and hopefully in the future use some of, if not all, the dividends for things like bills, vacations, and of course to help out family and friends. Now, like we sort of mentioned, the dividend snowball effect happens when a portfolio full of different dividend paying stocks and ETFs is paying you so much money in dividends on a consistent basis to where you can then use those dividends to buy even more stocks and ETFs, which will of course pay you more dividends moving forward. And although there's different milestones that you will see throughout your own investing journey where it really feels like the snowball effect is taking place, as of right now in my long-term portfolio, and as you can see, this is just one of my brokerages right here, this portfolio is paying me a sufficient amount of income on a monthly basis, that is, to allow me to buy an additional significant portion of assets, which of course pay me more dividends ongoingly. Now, like I said, this is just one portfolio from one brokerage, but as you can see in this portfolio alone, I'm earning almost $300 per month in dividends just from realty income, which just that one dividend alone can buy me more or less 5 or 6 shares of realty income ongoingly on a monthly basis. Now, the important aspect, the important takeaway that I want you guys to all realize about building a long-term dividend growth portfolio and building the portfolio to the point to where you yourself are experiencing the snowball effect. Building a portfolio with not only different dividend paying stocks and ETFs that have a decent starting yield, which are going to pay you a significant amount of dividend income ongoingly, that's of course going to be helpful because then with that income, as long as you're not spending any of it, as long as you're reinvesting it into more dividend paying stocks and ETFs, that's going to help you grow the portfolio exponentially. But on top of that, building out a portfolio with different names within it, things like the Schwab US Dividend Equity ETF or SHD, which ongoingly, at least historically, have paid around 8 or 10% more in dividends year over year. By buying assets and holding onto things like that in your portfolio, this means that my roughly 600 shares of SHD will not only pay me a set amount of dividends ongoingly today, but next year and the year after that, hopefully it's going to be larger and larger. Now, the importance of this is that you're not going to have to spend another dollar in order to receive more and more income later on. And although throughout this portfolio, there are certain names in here that pay more or less the same exact amount ongoingly, there's also different names in here like Realty Income, which just announced a 2.1% dividend increase, which is significant because I hold around 2,800 shares. So just that one dividend increase from Realty Income is now going to be paying this portfolio roughly $15 more per month ongoingly. Now, maybe some of you guys were saying, well, why are you really that excited about $15 per month? I mean, you have over $1 million portfolio, but if you're thinking that to yourself, you're not understanding the bigger picture here. If you're investing into different stocks and ETFs across the market that all for the most part are going to pay you more and more over time, and on top of that, throughout time, you're going to be reinvesting dividends into more of these different dividend paying stocks and ETFs, the portfolio is going to snowball, and trust me, it's going to start having a mind of its own. Now my portfolio right now, because on average I earn north of $6,000 per month, I'm able to buy a ton of additional shares of whatever stocks or ETFs I want to buy in that given month. And with those additional shares, of course, you guessed it, I'm earning additional dividend income. That means that as of right now, even if I buy into lower yielding dividend paying stocks or ETFs, I'm adding roughly $20 to $30 to $40 per month of additional dividend income every single month that goes on. Now, if I invest into higher yielding things like maybe QQQI or SPYI or even JEPQ or JEPI, of course, the dividend income from that $6,000 in dividends can potentially be much higher. But regardless, building out a portfolio that not only pays you more and more over time, because you're buying into different stocks and ETFs that have a history of dividend growth, but also reinvesting those dividends into more assets is going to allow you to build a dividend snowball just like I have. So I hope that gave you guys some perspective on what it looks like to build out a portfolio that's actually snowballing like crazy as of right now. Now, of course, I have to say it, I know my portfolio is not the largest portfolio across the world or across YouTube or anything of the sorts, and my portfolio is not by any means the best portfolio out there. But one thing I can say about my portfolio, whether you like it or not, this portfolio is earning a ton of dividend income monthly, and as long as I continue to reinvest those dividends into more dividend paying stocks and ETFs, this portfolio is going to continue to snowball out of control. I was lucky enough to pretty much from the start have a strategy in mind that I luckily haven't deviated too far from since the start, and that strategy was to build out a long-term portfolio of different high-quality assets that hopefully go up in price over time, but regardless, pay me a dividend. Now, I'm not saying that dividend investing is necessarily better than that of like growth investing. There's obviously pros and cons to both of them, but at least for me specifically, I absolutely love from the start the fact that I could buy a share of Verizon, for example, or a share of Apple, for example, or a share of QYLD or Realty Income. And every single share that I purchased on a daily, weekly, monthly basis, I could then forecast a rough amount of dividend income that I was now going to be able to earn basically in my sleep. Now, with some of you out there watching this video, I'm sure you are a lot like me where you of course want to build out a portfolio that's going to go up in value over time, but dividends are very important to you. Cash flow is very important to you. You want to build a portfolio that's going to cover some or all of your bills in the future. And if that does happen to be the case for you, I need to give you one major piece of advice. Now, I've talked about this advice on other videos, but it's very important. And that piece of advice is to track your dividend income on a daily, weekly, monthly, and yearly basis. Now, you of course could build out your own dividend tracker. It could be very simple using something like Microsoft Excel or even Google Sheets, or you could of course grab this exact same dividend tracker down below my description, or honestly you could even just buy a notebook and track all the stocks and ETFs that you buy on a consistent basis and how much dividend income they pay on a monthly or quarterly basis. Now, I found this very important even early on in my dividend investing journey, and for me specifically, I remember buying a few shares of Realty Income very early on. I think at the time Realty Income was probably paying around 23 or 24 cents more or less on a monthly basis, and I found it so motivating. The fact that every single time I went into one of my brokerages and I purchased a share of ticker symbol O, Realty Income, I now was 24 cents on a monthly basis richer. And the reason on why tracking the dividend income was so important to me is because now I could set goals for myself on a weekly or monthly basis. Things like I want to try to get to a point to where I can purchase 4 shares of Realty Income on a weekly basis, and then over time get to a point to where I can purchase 10 shares of Realty Income on a weekly basis. Because at that point, I knew that on a monthly basis, I was going to be able to raise my dividend income that substantially. But now lastly, I have a question for you guys down below. If you right now are building a portfolio and building your dividend snowball, what's the number one stock or ETF that you're adding to your portfolio as of right now? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.